Hello, can you hear me, sir?
Yes, sir, you're on.
Yes, sir. Good evening, all of you. Sorry for the inconvenience, sir. I'm here to present the first quarter results of this financial year. Again, one more consistency. We are able to show that these results of the June quarter. Our global business has grown 11.47% year on year and stood at 23.10 lakh crore. Our global deposit has grown at 11.97% year on year and stood at 13.35 lakh crore. Our global advances have grown at 9.86% with year-on-year growth and they stood at 9.75. This is despite our current quarter also we continued our shedding of low-yielding advances. We have shed almost 22,500 crores in corporate. Even then we could show this near to the 10% growth which we have given the guidance last quarter when we announced the results. With this, our net profit has grown at 10.37%, year-on-year growth and stood at 3,905 crore. First time in the history of the Canara Bank, our common equity Tier 1, that is CET1, has crossed 12% and stood at 12.05% with a 55 basis points year-on-year improvement. Our return on asset has further improved from 1% to 1.05% in the quarter and with a year-on-year improvement of 6 basis points. As given earlier also the guidance that we reach the 90% of this year, we continue to provide additionally. That's why our PCR also has improved, further improved to 89.82% and with an improvement of 118 basis points year on year. Our credit cost has shown further improvement and stood at 0.90% with a decline of year on year 20 basis points. Our gross NPA both in absolute number and percentage has shown improvement and a decline to 4.14% with an year-on-year decline of 101 basis points. Our net NPA also has shown improvement and a decline both in absolute number and percentage and stood at 1.34% and a decline of 33 basis points year on year. This business group is grown led by RAM sector. As a reason, we were repeatedly giving the guidance that we are focusing more on the RAM sector and we want to see that our RAM sector reach to the 58% of our total credit portfolio. And with this, our RAM sector has touched 57%. 1 year back, our RAM sector was 55% and now it has reached to 57%. This was because our RAM credit has grown 12.36%, so that overall credit grown at 9.86%. The RAM sector alone has grown 12.26%. This is led by our retail credit has grown 23.54% and stood at 1.75 lakh. And our housing loan also grown at 12% and stood at 96,108 crores. Our vehicle loan has grown at 15.49% and stood at 17,708. Our revenue per share. Before telling the figure, let me again remind you that during the quarter, our share price has been split into 1:5 and that earlier the share price was the 36 share, now it's split into 5 shares, that is now each share is 2 rupees with a face value. With that face value, our earning per share becomes 17.37 with a year increase of 10.18%. Our fee-based income has shown a 16.75% growth and stood at 1,910 crores. These are all the few news I have shared with you. Anyway, we have shared our entire presentation to all of you. I am sure that by this time you might have gone through that entire presentation. Now we are all working along with me, our Executive Director, Shri Mukherjee sir, and Ashok Chandra sir and Hardeep Singh Ahuja. We are all there with you and all the top management is with you. You can ask any clarification, sir. We are here with clarifying that. Now this forum is for you, sir. Thank you very much.
Thank you, sir.
Yeah, from the name of Lena Prakash. You can do your go ahead.
Yeah, hi sir, good evening.
Hi, Manadi.
My first question is on the growth front. So essentially, if I look at retail books grown by 12% Q1Q, so what exactly is driving this book? Because if I look at HL and vehicle, the growth is in line with the other books. It's not that high. So yeah, what is driving the sequential growth in retail books?
So let me say, madam, actually the RAM credit consists of retail, agriculture and MSME. Our RAM credit is growing at 12.26%. That contains the retail. Retail growth is current quarter it was shown 12.39%, it was 23.55%. Main reason is in agriculture our gold loan portfolio, we have stopped lending gold loans in the metropolitan cities for agriculture purpose. And because when the loan is growing, the portfolio is growing, we want to take some conservative steps on that. But at the same time, we want to meet the requirements of the metropolitan customer. The metropolitan customers also wants to avoid the gold loan. That's why we introduced the retail product in the gold loan retail with a little higher rate of interest and then from that product has received very well in the metropolitan. We stopped lending with agriculture and this portfolio is growing very fast. That is also helping the retail for growth growing at 23.54%. To the extent small big is there in the agriculture, that's the reason quarter on quarter agriculture you can show negative growth of 4.86%. But I understand last quarter sequentially last quarter it was almost starting its negative term, but this quarter we could repeat that and this quarter itself we are growing 3.42%. Overall if you see that the retail has grown at 10.39 and MSME at 2.40 and all, these things have brought the 10.26 growth in the RAM credit.
Sure. So it's mainly the non-agri gold loan in urban cities that's driving the retail growth, apart from.
Now, madam, see that the vehicle loan, this bank has never grown the double-digit growth. Now we are growing almost near to the 16%. And the housing loan, we are continuing to increase our market share every year. This is a very one few banks, one among the few banks where the market share in the housing is increasing. There is a consistency. And in our bank, we don't buy any portfolio by and we hardly participate in the lending portfolio. So the entire RAM business, whatever we garnered from our brick and mortar outlets, branch derived business. So this is a complete business. It's not that only the gold loan portfolio what we introduced is the main cause, but it has helped us earlier ways to grow at 14% or like that, but now the retail growth at 23%, definitely that portfolio, that particular product is helping us.
Sure. And what are the yields in this book, the gold?
More than 9%, madam.
Sorry?
More than 9%.
Okay. Versus what is it in the agri gold book?
8.75, madam.
Okay. And secondly, now, on the margin front, so this quarter we saw a dip in the margin, which is closer to your lower end of your guided range of 2.9 to 3. So what will be the full year guidance on NIM and is there any change?
Madam, you can observe from the last past 3 years, so generally in the first quarter, our NIM were comparatively lower because that we calculated based on the average business. The first quarter, my average business is higher. Gradually, this comes down. That's the NIMs will go up. And in the second and third and fourth quarter, the NIMs will go little better. So, but last time also I shared with you, they have given the guidance at 2.90. Our NIMs will go around 2.95 to 3. So, and I feel that 2.95 by the end of this year, we can expect it to 2.95.
Sure. And just finally, a data keeping question. What will be your outstanding restructured book? Thank you.
Our outstanding RF1, RF2, everything together as on date, originally it was 24,000 crores. As on date, it is 16,000 crores. Out of that, 11,000 crores are standard asset. 4,900 odd, approximately 5,000 is under NPA.
Sure. Thank you so much. I'll come back in the.
Thank you, madam.
Thank you. Our next question is from the line of Raju. Jania, please unmute yourself and go ahead.
Yeah, hello, sir.
Hi.
Hi, hi. Just a couple of questions. Firstly, is that why has your SMA 0 growth? Which sector is considered for the growth in SMA 0?
SMA 0, see that SMA 1 and 2 we are able to control, and year on year or even sequentially quarterly we have shown better performance. The SMA 0 because of one account, it is a central public sector undertaking, we have shifted to SMA 0. And where the
Sir, it's 45 billion. It's 45 billion, 4,500 crores, na?
it is 3,800 crores approximately.
Okay. And which sector?
Madam, further details it's a full shift telling to Andhra Pradesh. That much I am telling you, that is enough to identify.
Yes, yes, of course, sir. Thank you so much. Thank you. And so, the other thing, there has been change in investment norms, right? So, with that, what has been the what have you taken to the shareholders' fund? And then, what is the increase in yield, investment yield because of these changes?
Yes, madam, the president in charge is going there. Mukherjee sir, he will explain to you that. Actually, whatever is because of this reclassification, I will explain to you. Afterwards, he will further clarify to you. Because of the classification, there is no chance of shifting periodically from LT maturity to available for sale. Because of that, the interest on investment has shown improvement, but at the same time, the treasury yields have come down.
एक सेकंड हाथ वर केलाय रेज हँड कसं करायचं
Okay, but what is the impact on yield on investment? Just because of the change in norm.
No, the yield on investment, we have shown that it has gone up.
So it's all because of
Yield on investment, you say that earlier it is 6.91, now it is 6.94. 3 basis point has increased.
Okay, so it has increased 3 basis points because of this.
Yes, madam.
Okay. Okay, and so my last question is on loan yield. Basically, why you did explain that why loan income is softer because of average balances. But can you clarify on the interest from NPL? What was the recovery income in the fourth quarter through NII and what is it now?
No, actually, if you look at the compared to the situation, the normal interest rates on the previous March quarter and this quarter, there is one accounting policy has changed as per the regulator requirement. Earlier we used to collect the premium interest, whatever we collected, we used to count as the interest income. Now, as per the regulatory directions, from 1st April onwards, we are counting it to the other income.
Okay, so what is
You can say approximately is 150 to 150 crores.
got it?
And then we are asking about NPA, and generally every quarter it will be around 150 to 200 crores. When compared to the March, we recovered little more, so we got around 300 crores. But that's this quarter again normally we are between the 150 to 200 crores.
Okay, sir. Okay, this is very helpful, sir. Thank you.
Thank you, madam.
Thank you. Next question is from the line of Anand Dama. Unmute yourself and go ahead.
Thank you, sir. So basically, the yield on loans which have contracted during the current quarter is what you have basically mainly said because of the change in the regulation related to penal interest.
One is the change in the regulatory treatment of the penal interest. The second one is other interest income. Sir, last quarter situation we got 3,000 crores. That is the interest on overnight deployment of the surplus funds. That has come down to 1800 crores. So there is a 200 crore shortfall there.
Then in that case, the next 3 quarters, basically, we should expect the yields to again improve because these one-offs will be largely behind, and on a quarter-on-quarter basis, we should see an improvement in yields, right?
So interest on advances, definitely it will show some improvement. But other interest income depends again depending on the availability of opportunities. When you have surplus money, you have to invest in the invite or the best call money market जो भी है, that depends on the demand and supply.
So secondly, on the SMA book, you said that there is one large PSU account based off Andhra Pradesh. In the another public sector bank, which is the Union Bank, had also shown a higher SMA book during the current quarter, but they have made a provision on these loans. Do we have a...
Let me say that, let me confirm to you that this entire portion, even if it slips in the September, or even restructuring coverage, say even downgraded, the requirement of 15% provision, entire provision of 560 crore, we already provided in quarter itself.
Okay, you have already done that. Oh, great, great.
Yes, 100% we already done requirement.
Sure, sir, great. Thanks a lot.
Thank you, sir.
Yeah, good afternoon. Yeah, very good afternoon. Two things I was looking at. One is like see the total, the cost of funding going up. That is one thing I want to know what is the reason. And secondly, I also saw that the total loan book has gone down and it is also, the realization total income is also gone down. So what is happening in these two scenarios?
One is cost to income, sir. You see that from the March it was actually more than 50%. Now it is 47%. Sequentially, there is a reduction in the 3% in the cost to income ratio. One is that the March it was very high in the cost to income ratio was, but because the staff cost was very high, the bipartite settlement was happened once in 5 years, and entire areas have been paid in the December and the March quarter. Whenever the retirement benefits provisions has to be made, entire thing has to be completed in the March quarter. That's why the cost of staff expenses have been increased. But to that extent, to some extent, it has come down to 4,200 crores now. It is. It's cost of funding. The cost of funding is deposits, it is why it is increasing is the incremental deposit rate, whatever it is happening in the system, except the CASA, where there's the SB and current account. The remaining entire retail term deposits and bulk deposits, the bulk deposits are ranging between the 7.5 to 7.8. And the retail term deposits, investment around of 7% it is there. So, since the market demand is very high for the deposits, the cost of deposits, the average cost of incremental deposit is more than 7.5%. That is increasing cost preferring as per that acquisition of the deposits. The cost of deposit is increasing from 5.5 to 5.70. It will continue for the next 1 or 2 quarters also, because unless otherwise the liquidity in the system improves. Again, as concerns are expressed in the various sections. Now that the technology is matured, 20% of the savings are diverted to mutual funds and equity side. That is also putting some pressure on the bank deposits. But since we have a central government sovereign guarantee, for rising deposits we are not facing any difficulty. But only thing, we are forced to pay higher rate of interest for gathering that deposit. You can see that our deposits have grown in double digits, almost more than 11% we have grown. So rising the deposits we don't have any issue, but the incremental deposit we are rising, it is a costly affair for us. That's why our cost of deposit is increasing. The yield on advances, there is no reduction, sir. We have taken enough paid on that yield on advances. The 8.71 to 8.66 is merely because of the reclassification of the total interest income. Earlier we used to count the interest income, now we have shifted it as per the guidelines given by the regulator, we are reflecting in other income. So that has shown that to 6 basis points reduction. Beyond that, nothing is there in the yield on advances, but I can say that yield on advances already reached peak. Further improvement, unless otherwise there is a repo rate increase, there is no chance for further increase in the yield on advances. Already, whatever the reaching we can do in the corporate book, we completed the reaching of this quarter. Now, all our advances corporate sector also is carrying our average yield on the corporate sector has now touched all-time high of 8.31%. So the yield is now already reaching the peak.
Okay. So can we expect the NIM to be possibly improving in the coming quarters?
Generally, compared to first quarter, second, third, fourth quarter, when we reach to the fourth quarter, slight improvement needs will be there, sir. So what we are giving also Shri with when I am sharing the guidance of 2.90, we may end up at 2.95 by the end of this year.
Thank you. The next question is from the line of Omkar. Please unmute yourself and go ahead.
Hello. Yeah, hi sir. In this quarter, our FD exposure has reduced quite a lot. So, any reason is this a cautious stance from your side, or what is the reason for this?
No, actually, our gold loan portfolio is the major contributor for agriculture portfolio, sir. Out of this 2,40,000 crores, 1,01,000 crores is core agriculture. And the remaining the 1 lakh, whatever it is going, 38,000 or 39,000 crores is from the gold loan book. But because when the book is going so fast, we have taken a calculated business decision that we are afterwards, because the agriculture, when we are classifying that gold loans in the agriculture, we are needed to maintain certain land records and all those things. To have a more and more cleaner portfolio, and we have decided that in metropolitan cities we stop funding agriculture loans against gold. But at the same time, there is a lot of potential in the metropolitan city also to drive the loans against the gold loans. That's why we introduced the retail product, personal loans secured by the gold loan, and with a higher rate of interest, little higher rate of interest. That has attracted the attention of the metropolitan customers, and that is giving a good in the retail loan. But to the extent where there is a dent in the agriculture portfolio.
Okay, thank you. The next question is from the line of Nesh. Please unmute yourself and go ahead.
Sorry. I have a question. Am I audible? Sorry.
Yes, you're on.
So I have a question on slippages. So the slippages are consistently around 3,000 crores. So there is no relief there. So I have a question on short term and long run. What company is doing to make it below 3,000, or what are the rectification in our system going on?
See, when we are having a 10 lakh crore, 9 to 10 lakh crore asset, in a year 12,000 crores is, I feel that it's a reasonably a banking practice. So, but it doesn't mean that we are complacent or that we have reached to our required goal and we don't do further fine tuning that. If you look at the where actually this quarter we have done well in this quarter and last quarter in the gram sector and all. But there are in existing MPs where if any additional debits have to come, that is showing some 300 to 350 crores additional slippages on that. But otherwise, our whatever the flush slippages we are able to contain below 3,000. But suddenly bringing to 3,000 to 2,000, I don't think that's practically possible there. But definitely quarter on quarter, maybe 100 crore or 200 crore or 50 crore. Further reduction, we are keep on trying that, we are confident of reaching.
Thank you. The next question is from the line of Rahil. Please unmute yourself and go ahead.
Hello. Good afternoon,
Hi,
sir.
Raju.
Hi. Just question on the guidance you had shared earlier for FY25. So just quickly, are we on track when you said advances will grow at 10%, ROA will be 1%,
Shri, I'll tell
credit
you
cost
one
at
better.
1.1? So if you could just share your outlook. Is there any revision there, please? Thank you.
Yeah, we are not revising any of these guidelines. I don't feel that it's difficult to reach all these guidelines except in the CASA, but still, CASA also we want to try for that 33%, whatever it was, we have given the guidance. So we have given the guidance of business growth at 10%. First quarter, we have grown at 11%. Our advances growth, we have given 10%. We almost reached the 10% even after shedding 22,500 crores in the first quarter itself. And I am very much confident that we will grow beyond the 11 to 12% growth in the next 3 quarters. And it's a 2.9 we have given. We are already in the first quarter itself. We are able to show that 2.9, and further 3 quarters there will be a further slight improvement in that term. There won't be any deterioration. Gross NPA we have given a guidelines of 3.5. There is a further reduction. We have come up to 4.14. Net NPA also we have given guidance of 1.10. We already have come down to 1.24. Slippage ratio we want to maintain at 1.3. That's almost we are able to maintain it. Credit cost, demand, return on equity, earning per share, return on average asset, all these things already we surpassed. Whatever the guidelines were given for the year end. In the first quarter itself, credit cost, return on equity, earning per share, return on average assets, we already surpassed those.
Thank you. The next question from the line of Suraj Das. Please unmute yourself and go ahead.
Hi, sir. Just one question. In terms of this gold loan book that you were talking about, what could be the quantum that is sitting in the retail?
Now it is almost 19,000 crores is there around.
Okay. And sir, rest of the book, I mean, what would be the other segments in retail?
No, mostly it's 19,000 crores that is there. It's now it is as on date is 155,000 crores is there. 1,55,000 crores total. So if you remove that, maybe hardly 1,000 crores is in the MSME, remaining are all in the agriculture.
No, the gold loan.
Yeah? Retail gold loan is 19,000, but if you remove 19,000 out of 170 retail, so 96,000 is in the housing loan, 17,000 on the vehicle loan, 16,000 on the educational loan. The remaining is personal loans and mortgage loans.
Okay, sure. Thanks.
So, the next question is from the line of Jay Bolo. Please unmute yourself and go ahead.
Hi, sir. Good evening. Quick question, sir. Sir, if you look at slide 22, wherein we give the yield on advances, I believe the numbers are, cumulative number, right? So for March 24, 8.71 yield is for the 12 months. And, the number.
Tell me, sir, tell me.
No. So I wanted to check, sir, if this number of March 24 is it the cumulative number or for the quarter? Because if it is cumulative number, that would mean that the QOQ decline in the yield on advances is much, much sharper, right? Because we started the year with.
No, what we have given in the March 24, 8.7 is that particular quarter, and along with that, cumulative. That's cumulative correct. What is correct? CFA will explain to you further.
Well, that what you asked, my first quarter is not cumulative.
it is a standalone quarter. What we gave for March was a cumulative of 4 quarters. So what you are anticipating? Hmm.
No, yes, please complete.
No, no. What you ask that if this is taking into consideration that if that March, then it is a sharp fall. No, it is not considering the March. It is standalone April, May, June yield.
Okay, so this is only
Yes. Now, whatever we will show every quarter will be cumulative for up to say next quarter, it will be from April to September, December, it will be April to December. So, but this, what we showed now, the yield is standalone April to June.
am I audible? Yeah, so that I was checking if this 8.71 number, 8.71 is the for the quarter,
Yes,
right?
this is for the quarter. Since once we write cumulative, cumulative means it is for one quarter this. Now, I think I have answered your question.
Right. No worries, sir. Secondly, sir, if you can provide the breakup of slippages in the quarter
You can note down, sir.
and also
Agriculture is 900 crores. MSME is 1220 crores. Retail is 500 crores. The corporate is including existing NPAs to increase the total it's around 600 crores.
okay. And sir, lastly, if you can provide the breakup of the loan book by benchmark, how much is EBLR, how much is MCLR, and how much is repo by rupees crore.
Sir, out of the total book, 51% is MCLR, sir. 8% is RLLR. The repo rate linked. The remaining is like a loan against deposit, staff loans and all.
Okay. And sir, lastly, you mentioned that we have now a very strong CET1. What was the impact of the investment
What was the
guidelines
impact
on
of
CET1?
because of reclassification, the reaccounting procedure of reaccounting procedure of
That has an impact on the CET1.
no. Sir, it is around 1400 crores that we got added, and of which 1100 crores for is on the reserves, and 300 crore has gone to HPL.
Okay. And lastly, sir, if you have any capital raising plan, because if you can clarify, do we have a board approval or do you intend?
CET1 is very comfortable. It is above 12%. I don't think we need to go to the market for core capital. But Tier 1 and Tier 2, 81 bonds and Tier 2 bonds, the board is already permitted that the management to go to the market to the extent of 8,000 crores to rise. Out of that, 4,000 crores is 81 bonds and 4,500 crores is Tier 2 bonds. That will come to the market depending on the favorable conditions of the. We are very much price sensitive, so we look forward for that whenever we get a better opportunity, better pricing, then we will go to the market and rise. And again, I want to tell you that because we have a plan, just one minute, because we have a plans to disinvestment in our subsidiaries, only that plan in the Canara Tobacco mutual fund, it may come to the disinvestment in the fourth quarter of this financial year. That also may support our capital CET1, sir.
Right, sir. That is very helpful, sir. Thank you.
Thanks.
Thank you, Jay. The next question is from the line of Ashok Jain. Please unmute yourself and do it. Yeah, good afternoon, sir. First of all,
Good afternoon, sir.
yeah, I'm Shri from Mumbai
Thank you. Nice meeting you, sir.
for excellent reviews. And I have two questions. One is that our transfer is come down. If I compare from March 24 to June 24, transfer has come down 20%. Whereas you were telling when in the last meeting, that you are looking more response in employee.
Let me say this, sir. Let me clarify this question, sir, first. The savings bank, whatever of the initiatives, it has started giving the results. And state savings bank, you can see the accumulation and creation of the deposit from year on year, June to June. If you see that absolute numbers, 12,000 crores, there is an improvement in the SB individual itself. In the SB individual, so that the incremental growth is almost 18,000 crores. So more than what is reflecting there. But in SB, there are institutional deposits which gradually is going out of the system because of central government, but the whole system of, they are keeping most of these funds because of the latest software that they are keeping the Reserve Bank of India. So central government funds are slowly going out of this banking system. But that is being compensated with the SB individual accumulation savings. But in overall, it is reflected absolute numbers. It is 12,000 crores absolute numbers in year on year. The current account, the March figure, when you see that sequentially, March figure, in the March month, we are one central government department, we are dealing with that, we are a banker for them. We got a funds of around 15,000 crores in the current account. And first April to March, that amount has, first week of April, it has converted into bulk deposit. So to that extent, the dent is reflecting it. But it is a 15,000 crores, it has moved from current account to there. But the reduction, what it is appearing is only 11,000 crores. If you see that.
When we explain when we show it to the market, we don't show to the market. Later, what you
We will try to explain to them, sir. There is no problem. If any correspondence is there, we will try to tell them.
okay. Yeah, sir. Second question is that recently you have come to infrastructure bond.
Yes, sir.
So your plan, I mean, you want to come with more amount or how much you are in 6 hours bottom line?
No, sir. Actually, board has permitted for this year to take rise of 10,000 crores, which initially we thought that we will raise 5,000 crores and 5,000 crores. By seeing the overwhelming response of our issue, whatever the green issue option is there, entire 10,000 crores we have taken in single swoop itself. For this current financial year, we have whatever the board is permitted, we already raised it, sir. Because whatever we are raising against the infrastructure bonds, it has to be invested or the lent only towards the infrastructure lending. Of course, we have enough cushion in our book for we already lent enough more than the what we are raising in the market. So much exposures are there, but still we will see in the second half if the board permits for us, we will think about that. It depends on the market availability of the liquidity, again the demand for the infrastructure bonds. If suppose the liquidity is improved, my cost of funds and the deposits have come down, then I may not think about it. Since currently the incremental deposit cost is very high, we have gone to get infrastructure bonds to compensate and to use the other resources at a lower rate of interest.
The next question is from the line of Piran Engineer. Please unmute yourself and go ahead.
Yeah, hello sir. Congrats on the quarter. Just wanted to follow up on one question on the comment you made on savings bank deposits. So, what percentage of our deposits come from government funds, government or other such non-retail?
No, also I'll tell you that in the savings bank itself, out of 332, it's only approximately 48 to 50,000 is from the institutional deposit. These 48 to 52 is also it's not entirely from the government deposits. This institutional deposits contains the NGOs, pilgrim centers, colleges, universities, everything will be there. But I see that the government deposits maybe around 22,000. That is the range we might be having that. So that fluctuation will be there. Whenever that fluctuation is there, because of our some initiatives and new products, so that is being compensated with individual savings bank. Our focus now is in individual savings banks.
Okay, okay, sir. That was very useful. And sir, secondly, this might be a bit early, but under Ind AS accounting, will you be allowed to reclassify your NPL provisions into standard asset provisions?
I will ask my CFA to answer to you, sir.
But as you know that Indian provision is also, it's still not crystallized, but there is nothing which suggests that NPL will be allowed to be classified as standard asset. The only green shoot that may be available there is in case of NPL, or especially doubtful and loss assets. In spite of having good security, we are making 100% provision. But if against those loss or doubtful D3 assets where there are good securities, that may allow us to provide less. Only that is expected, that will only be clear when the full guidelines come.
No, sir. I meant right now your provision uh, is around 30,000 crores on NPL. Can you say reduce to 25 and move 5,000 to standard asset? Will the auditors allow it? Is it allowed under the new accounting?
See, especially that the entire details of the new accounting system is has not come. But as you said in NPL, especially loss doubtful, we are making 100% provision irrespective of the liability. In case if I said in relaxation, it may get some green shoot, but that will be more than compensated by standard asset provision, where I have to make much more than 0.4%, which we are making. But having said that, the bank is in a very comfortable position if any provision that we have to make in under India's, even considering that, although as you know, what RBI said is to be covered over a period of 5 years, even if it is hypothetically needs to be provided in a 1 year, all our capital ratios should be in a comfortable position. This much we can say.
Okay. Okay, sir. Thank you so much and all the best.
Thank you, sir.
Thank you. The next question is from the line of Rakesh Kumar. Please unmute yourself and go ahead.
Yeah, hi. Thanks a lot, sir.
Hi,
So
Rajesh.
just one. Hi, sir. So, sir, just one question, sir, with respect to this other interest income of 781 crore. I don't know if you had responded to this query. Uh, so, if you can clarify what is the corresponding, balance sheet number where we are getting this, interest income, or maybe if you can explain, like, what is the source of this number. So, year on year, there is a large jump in this number. So,
Actually, these are all that's what actually earlier also I clarified. When you have surplus money in your system, when the market be there is a liquidity crunch is there, your surplus money can be used effectively in the market by deploying the overnight or call money or anything. When you are deploying that, you are entitled for some interest. Because we have an excess SLR of almost 8%, and we have in our system also last 4 months, we are having a surplus in our liquidity. This liquidity we are using effectively by lending wherever it is required, depending on the demand from the other institutes. That is the major contributor. The minor contributor is from some of the tax deducted, income tax, whatever it is there, some interest on that tax deducted. These refunds also will be there.
okay. But just if we, sir, if we uh, take this, complete, the return what we have from cash balances other than CRR. So why this number is so high, sir? Like, if I take the interest income on the cash balances and this interest income, what you're saying on the liquidity, that surplus liquidity that we have, this number is very, very high, sir, as compared to any other PSU bank.
But if you PSU bank is, when you say PSU bank liquidity is there, it's not there in the top 5 banks. Only we are having comfort that in that way, and we are deploying that. The other thing is what you see from it is year on year, if you see that is very high, but sequentially it has come down, no? You are not saying that?
Yeah.
Sequentially, the other interest income has come down from 2000 to 1800.
So for the full year, sir, if you can help us that how would this number look like for the full year? The other interest income.
No, Rakesh, if you see, this is a number because which if you are, if that includes interest from interest rate swaps, SDL, RIDF, etc., including some, as sir said, on income tax refund. These are not steady income sources. So this can vary based on market condition. So it is very difficult to say what will be the figure on a consistent basis. But if you see, there is some sort of consistency which we have maintained over last year.
3-4 quarters, we are maintaining that consistency. If you see that last September onwards, I remember that September, December and March now, there is a consistency. It is around 1500 to 2000. And we are able to maintain that consistency.
Okay. And secondly, sir, on the non-SLR side, so the total non-SLR, if we look at in the slide number 26, has come from, there is a one line item which is others. So there is a 10,000 crore increase in that number, which is reflecting the increase in the total non-SLR also. So what is that number, sir, which is sitting into the others?
It is investment in mutual fund. That is around 7,500 crore roughly.
So in the March quarter, that number was 4,000.
No. It was very small. So because we had some surplus funds, so we deposited in this mutual fund and CD. CD is around 3,000 crore. So if you add that, you will get the number.
And it was a very short, it is a short duration. As we speak today, that amount is not there in others. So it was a short-term investment that we liquid certain amount.
Whenever you get an opportunity to earn higher yields, these are all the windows available to the banks and they use these for earning a higher returns. Because the balance sheets are based on particular specific date, that particular date the investment may be outstanding. But it's not that once that is outstanding, it will be there in every quarter that much.
Okay. Got it. Thank you, sir. Thank you. Thanks a lot.
Thank you, Rakesh.
Thank you. Due to time constraints, that would be the last question for today. We hand it over to MJ for your closing remarks.
Thank you very much, sir. Whatever you have given the guidance, we will try to do much better than that. And the first quarter itself is what we are doing, that consistency in our performance. Our main trust area is consistency. There should not be any majors in your performance, whether it's the bottom line or the top line. Same the corporate call, what we want to show that steady growth in all the business parameters without affecting the bottom line. That will continue, sir, and will continue to perform. Thank you one and all.
Thank you. We conclude today's meeting. You can all disconnect.